Welcome to Explain the Charts, and today we're taking a deep dive into Apple stock, analyzing the recent news and its impact on the chart data, all in UTC time, so you can make informed trading decisions. Let's start with the news. Apple stock took a hit yesterday, closing down 2.16% after reports surfaced that Apple cut orders for its latest iPhone, the iPhone 16, by millions of units. This news sent shockwaves through the market as investors became concerned about Apple's demand outlook, particularly in the face of increasing competition from other smartphone manufacturers. However, there's more to the story than just the iPhone 16. Apple's CEO recently visited China, a key market for Apple, amid growing competition in the region. Apple's stock has also been impacted by mixed reactions to its new AI software, Apple Intelligence, which was released alongside the iPhone 16. While some analysts see Apple Intelligence as a positive development, others are disappointed by the lack of AI features integrated directly into the iPhone 16. Adding to the uncertainty, Jefferies downgraded Apple to hold from buy, citing concerns about iPhone 16 sales. This downgrade further fueled the bearish sentiment surrounding Apple stock. However, it's important to remember that analysts are often divided on their opinions, and a Wall Street analyst added Apple to his firm's tactical outperform list ahead of the company's earnings report. This conflicting outlook highlights the ongoing debate surrounding Apple's future prospects. Apple's stock performance will likely be heavily influenced by the upcoming earnings season, with several tech giants, including Apple, Microsoft, Google, Amazon, and Meta platforms, all set to report their earnings next week. Investors will be closely watching these reports to gauge the overall health of the tech sector and its impact on Apple's stock. While the news surrounding Apple stock has been somewhat negative, we're not jumping to conclusions just yet. We'll now take a look at the chart data to see what it tells us about the current market sentiment towards Apple. First, let's look at the daily chart. On the daily chart, we see a clear downtrend forming. Looking back over the past month, we can see a steady decline in price, with each successive candle closing lower than the previous one. This downtrend is further supported by the fact that the price has fallen below the 200-day moving average, a key level often used by technical analysts to gauge the overall trend. The price is currently testing a support level at around $220, a level that has been tested and held several times over the past few months. If the price breaks below this support level, it could signal a further decline. However, there are also some positive signs on the daily chart. We can see a slight bounce in price over the past few days, suggesting that the market may be attempting to find a bottom. Also, the Relative Strength Index, RSI, a momentum indicator, is showing signs of oversold conditions, indicating that the downtrend may be nearing its end. This suggests that a potential bounce back from the current support level could be on the horizon. However, the overall picture on the daily chart is still bearish, and we need to look at shorter-term charts to see if there are any signs of a reversal. Now, let's switch to the 1-hour chart and zoom in on the recent price action. On the 1-hour chart, we see a clear reversal pattern. The price has been consolidating in a range for the past week, with the price bouncing between a resistance level at around $230 and a support level at around $220. This consolidation pattern suggests that the market is uncertain about the direction of the price. However, we can see a strong bullish candle forming on the chart, indicating that the bulls are starting to take control. This bullish candle has pushed the price above the resistance level, suggesting that the market may be ready to break out to the upside. This bullish momentum is further supported by the fact that the price has closed above the 50-period moving average, a short-term trend indicator. The RSI is also showing signs of bullish momentum, moving above the 50 level. This suggests that the market may be poised for a further upward move in the short term. But we need to consider the news events we discussed earlier. Looking back on the daily chart, we see that the 1-hour chart's bullish momentum is still very much in play. While we did see a dip in price yesterday, driven by the negative news surrounding Apple stock, the price was able to quickly recover and close above the resistance level, signaling that the bulls are still in control in the short term. However, the short-term bounce needs to be analyzed alongside the larger bearish trend on the daily chart. There is still a great deal of uncertainty in the market, and the news regarding Apple stock has been conflicting. The upcoming earnings report will be a major factor in determining the future direction of the price. If the earnings report is positive, it could help to reinforce the bullish momentum we're seeing on the 1-hour chart and potentially turn the tide in favor of the bulls on the daily chart. However, if the earnings report is disappointing, it could confirm the bearish sentiment we're seeing on the daily chart and trigger a further decline in price. To get a better sense of how the market is reacting to the news, let's take a closer look at the 15-minute chart. The 15-minute chart shows a high level of volatility. We can see a series of up and down movements, with the price quickly fluctuating between the support and resistance levels. This volatility highlights the uncertainty in the market. However, the overall trend on the 15-minute chart appears to be bullish. The price has been trending upwards for the past few hours, with each successive candle closing higher than the previous one. The RSI is also showing signs of bullish momentum, moving above the 50 level. This suggests that the bulls are in control in the very short term. However, the price is still within the range of the 1-hour chart, so we need to keep an eye on the bigger picture. If the price breaks above the resistance level of the 1-hour chart, it would signal a stronger bullish breakout. However, if the price falls below the support level of the 1-hour chart, it could signal a reversal of the short-term bullish trend. So, while the 15-minute chart is showing a short-term bullish bias, we need to consider the overall context of the chart data, which is still somewhat bearish. To recap, there are some critical price levels to keep an eye on. On the daily chart, the support level at around $220 is a crucial level to watch. If the price breaks below this level, it could signal a further decline. On the 1-hour chart, the resistance level at around $230 is a key level to watch. If the price breaks above this level, it could signal a stronger bullish breakout. However, if the price falls below the support level of the 1-hour chart at around $220, it could signal a reversal of the short-term bullish trend. The upcoming earnings report will be a major factor in determining the future direction of the price. If the earnings report is positive, it could reinforce the bullish momentum we're seeing on the 1-hour chart and potentially turn the tide in favor of the bulls on the daily chart. However, if the earnings report is disappointing, it could confirm the bearish sentiment we're seeing on the daily chart and trigger a further decline in price.